It is an absolutely bloody day in the markets, and this is as we get the news that 722 US banks have unrealized losses of over 50% of their capital. Now, make no mistake, the markets are certainly going to fluctuate, but since we've seen the first flinch by the Federal Reserve in plugging the holes in the US banking system, it gives us a pretty good idea of what's going to happen next. Now, let's go ahead and talk about it because I haven't been here making videos over the last week or so, and that's because you can probably hear in my voice, I have been extremely sick. This is one of the sickest I've been in forever. I got some weird flu, who knows what, but I'm still shaking it off, so I appreciate you rocking with me. But if you hear something weird in my voice, that's what it is. Anyway, this has been happening over the last week or so, which is the banking system, the cracks within the regional banking system created by the policy errors of the Federal Reserve. Look, this is what's happening. Something was bound to break. It's what we've been saying all throughout 2022, and now we're seeing the exact ways in which the economy is not able to handle this new monetary policy. Even Warren Buffett, Mr. Invest in Everything America, is very cautious on bank stocks, even as PacWest and other regional banks rally. Yahoo Finance literally has an article titled, "Are Banks the New Meme Stocks?" What's crazy is in 2023, it's banks that are actually being traded as memes. What we've seen is that a bank stock collapsing usually precedes it being taken over by the Federal Reserve, the FDIC, and brought into receivership. This is where effectively the bank goes under, the equity goes to zero. That's why people are shorting it on the stock market. And then either another bank needs to buy it out or the government needs to bail it out. These are the two outcomes, the two paths. And what we're seeing is little by little the nationalization of the banking system. Banks are dying, and all of those banks are getting bought out by too big to fail banks, or they're being taken over by the government. This is the way that the government is effectively taking over the entire banking system. And it's paving the way for things like the FedNow system, as well as effectively a CBDC or a national US currency. I'm not a big believer that the CBDC will come without a massive fight. And this is because the Republican Party has already started to show signs that they hate a CBDC. The point is that right now, things are changing in a massive way. And what you should focus on, in my opinion, is not the day-by-day fluctuations in the market. It's thinking about how this whole machine works. What are the actual outcomes, the actual solutions that can be put into place, and what it means long-term over the next 5 years, over the next 10 years. Because right now, in this brutal bear market, as we transition into a new cycle, that's my belief at least, is that we're in the transition phase to a new cycle. And that allows us an amazing amount of time to plan. That's why we don't get emotional. We don't overcommit. We make steady, slow acquisitions on the things that I believe are going to be valuable in the future. And amidst this banking crisis, you can't help but get a little bit excited about what it means for Bitcoin. Now, in news about de-dollarization, we have now Pakistan purchasing discounted Russian oil in Chinese yuan, ditching the US dollar. We have China developing AI without US chips. We have Coinbase leaving the United States and setting up a UAE, United Arab Emirates. That's where Dubai is, Abu Dhabi. And that's based on comments by Brian Armstrong. The same is being said of Gemini. This is, of course, because the United States has decided to make it untenable to stay and operate as a crypto business within the US. So crypto businesses are getting chased out of the United States. This is as regional banks are literally failing across the country, and we're one set of tweet storms or news articles away from another run on the bank across these smaller banks. If one bank falls, no big deal. The government can figure it out. Two banks, who knows? We'll get JP Morgan to step in and save the day. 720 banks, well, that's a tall order. And even though a lot of those banks will be smaller, the reality is what you're seeing is a systemic issue caused by years of free money being flooded into the world, a ton of zero interest or near zero interest debt being racked up across the board. And then all of a sudden the government comes in and says, you know what, we're going to make debt way more expensive. So all of this debt in the system is now very expensive to pay off. That's exactly what we have right now, is a mountain of debt that's just getting more and more expensive as the government tries to control inflation. That's completely breaking the banking infrastructure and actually killing off a ton of regional banks. If you're wondering, why does anybody use these small banks? The answer is, well, those small banks are the ones who actually run like real estate and other business loans. Most of the people who get like competitive business loans get them from regional banks, not from the big banks. The big banks don't give really attractive loans on real estate. They don't finance a lot of the deals. And real estate is a huge part of the American GDP. Anyway, the point is regional banks have a very very important role in our economy, and seeing them go away is a very, very bad thing. But the point is, what comes next? What is the outcome? Because eventually the Federal Reserve will need to decide, are they going to insure deposits? Are they going to step up and save the regional banking sector and sort of keep the status quo going around the American economy? Or are they going to let these banks fall? Are they going to actually have some kind of financial crisis set in? Either way, you'll be looking at crushing recession, which will probably eventually get bailed out by the Federal Reserve, or you're looking at a massive amount of stimulus to go ahead and save the banking system as we know it today. Either way, to me, it seems like the gears of the machine are ramping up to effectively create a ton of currency devaluation. And the question is, what happens next? Well, if we turn to some literature by Arthur Hayes, who's crushed it, he's also completely nailed this regional banking crisis. As you can see, step by step, he's been calling out shorts on banks, and I think he's made an absolute metric ton of money shorting some of these regional banks. Well, Hayes has a great theory about effectively the next era of currency, the next era of the economy being dominated by outside money, effectively assets that can't be easily devalued by governments. Well, we know fiat currency is not one of those, but the question is, what is an outside money? Well, we know Bitcoin is outside money. We believe gold is outside money, potentially other precious metals. And I've also heard an argument that real estate can be considered as outside money, though I personally would rather dabble in assets like gold and Bitcoin. So when you look at a world that's evolving away from the dollar, that's evolving away from fiat currencies in general, that's deglobalizing, that's effectively looking for neutral ways to transact with each other, we know that despite the tensions, the US will continue to transact with China, will continue to transact with Russia, Europe with Russia. All of these countries might not like each other, but they will continue to do business with each other. Well, you got to ask yourself, in that world, what is important? A neutral way to easily transact? Yeah, that sounds pretty important. Shipping around boats worth of gold, it sounds like a massive liability. In the end, it seems like Bitcoin has a warm and cozy seat in this new world, and that's why I'm betting big on Bitcoin and cryptocurrency to dominate the next era of the global economy. I personally can't see any other way. Looking at the machine, looking at 10 years out from now, it just doesn't make any sense to me. So that's why if we go down and we plummet here in price, then I believe it is an amazing opportunity. This is why we started the DCA mode. We didn't just throw all our money into the markets because we don't know. Maybe there's going to be a massive dip. Maybe there's not. Either way, I believe that diversifying your entry price is a really solid strategy. Now, it's worth talking just for a second. There was this massive meme coin craze over the last few days. I'm sure you saw it. Pepe coin had this massive run up. Obviously, I'm just going to say it. Pepe is my favorite meme, like way more than Doge. Like Pepe's actually a sick meme. I use Pepe memes in your Telegram chats and Discord chats. I'm always throwing Pepe's at. I'm even, sending my wife Pepe's. Pepe's my favorite meme of all time. So if there's any meme coin that deserves the light, that deserves to be the number one meme, in my opinion, it is Pepe. That said, you see how it peaked at 420 here? Well, like 000, whatever, 420. That to me is poetic. Anyway, what we've seen here is from the highs, it's about a 50% off its highs. Let me just refresh here because I think it might actually be more than that now. Yeah, we have a 57% decline here from the highs of just like 2 days ago. 2 days and a 60% decline after a parabolic run up. Look, I'm no doctor, I'm no scientist, but it seems to me like a blow off top. Does this mean that Pepe has no future? Does this mean that Pepe is dead forever? I don't know, man. I've seen a lot of memes come back and pump and whatever. I personally don't like betting on meme coins. It just clouds my brain because it's such raw gambling. And even if you spread it out and do like 100 meme coins, it's just really hard to have any kind of conviction in these because they can just disappear. The rallies can disappear in a moment's notice, just like this, right? And you see Pepe is now almost under, yeah, it is under where it got listed on Binance at about 200. Now it's under that at 184. You can kind of see the Binance listing as the exit pump where effectively it got listed on Binance. People were able to then short it on Binance. It got pumped way up and now it's just getting completely dumped down. There's also a ton of articles coming out like this of people looking at how you can create a meme coin in less than 23 seconds. It's actually kind of insane. If you watch this video, it's kind of mind-bending. This guy, literally, you can see it right here in 23 seconds. He opens Zeppelin, contracts wizard, he creates easy money coin, symbol easy. You go ahead, he clicks some boxes here, he deploys it, and within a few seconds, he has his own meme coin. So in the end, how precious are these things when they're so easy to create? I don't know. You make your own mind up. I'm certainly happy for anyone who makes money. As Ivan would say, you got to respect the pump, and I respect the pump.
The pump always, guys, respect the pump.
But at the same time, when I put out stuff sort of arguing that people shouldn't get involved in meme coins, it's because most people lose. There's a few people who win, but most people will lose because they don't spread out and do little bets into like hundreds of meme coins. They'll put like a ton of money into Pepe after it's already listed on Binance, and then then they'll end up losing. And people will say, oh, the real tech isn't pumping. The real tech, I'm going into the meme coins because at least they're pumping. Look, I made this mistake in the last cycle, and I'll keep repeating this because I think it's really useful to know. The real tech, the stuff like the alternative L1s, the L2s, the big coins in the ecosystem are still currently, a lot of them 90% down from their highs, and they haven't had any real movement. That's a easy 10x back to the prior highs, and that's assuming that they get there. Now, in my opinion, Bitcoin's just a 2x back to its prior highs, or something thereabout, a little over 2x, and that to me is a very easy move for Bitcoin to do under the right circumstances. We have the halving coming up. We have a bunch of positive factors coming up. We have the banking instability. We have potential massive devaluation of currency coming up. I don't see it as crazy for Bitcoin to get back to its highs and beyond. And in that world, I do think that those mainstream alts, those big alts, will start playing catch up around then. If you look at the market and what happened after Bitcoin regained its prior all-time high in 2020, and then in early 2021, the absolutely explosive market that came to the altcoins, well, my advice to everyone is just not to get too suckered into complete gambling, not to lose sight of the fact that this is the part of the market cycle that people give up on, the narratives and the technology, and they start just focusing on easy, quick money because they've just lost interest in the process. So my reminder is stick to the process. I believe that process will play out again, and that the narratives, gaming, alternative L1s, DeFi, scalability, cross-chain, the stuff that people are excited about, the tip of the cryptocurrency spear, I believe that stuff is where you can have conviction and actually hold it until something good happens, which is really hard to do with meme coins. Anyway, that's my rant on meme coins. I hope everyone made money. I hope everyone's okay and staying safe and sound. And I do believe that the next few years are going to be absolutely insane for crypto. So that's why I'm looking at, if we do have some pretty negative price action here, I'm going to be accumulating some coins on this dip. I'm excited to do so, because I do believe that this has been a massive corner turning or a massive pivot by the Fed to introduce new liquidity like they have been. Anyways, I'll be back with more videos soon. I'm not at 100% health, but I'm working to get back there, and I'll see you very soon on the next episode.